What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 8th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why we're planning to eventually, in the near term, go short on Bitcoin, the broader crypto space, as well as the broader equity market, as early stage signs of momentum are starting to fade, and we're starting to see that the traditional inflationary indicators that have signaled and led against Fed monetary policy are starting to flash big warning signs, leading us to be inclined to build some short positions on risk-on assets like crypto and stocks. We've got a lot to dive into in today's video. If you guys like it, consider dropping a like. It's one of the best ways you can support the channel. And we also have a sponsored review of EtherDrops, a really insightful Telegram bot that can help you to keep on top of on-chain metrics. So stay tuned. You guys won't want to miss it. All right, so let's go ahead and talk about Bitcoin here. As you guys know, this has been the strongest rebound from a relative low so far within this bear market, over 56.72% from bottom to top. And ever since the later part of January, we've seen price action holding relatively sideways. And while this isn't sending any major warning signs in regards to per se correction or sell-off just yet, we need to understand this is at least the first initial sign of weakening momentum. And we can see that ever since back here on January 20th, we've been pushing sideways. And one of our favorite momentum indicators here that we utilize within the Dash report, which flips blue when we're starting to see a potential trend reversal, has been holding up this entire time, but is starting to showcase some signs that the weakening momentum is coming into play here for Bitcoin. Now, I want to come back to talking about Bitcoin, crypto, and the broader equity markets more specifically later on. But I want to go ahead and first talk about not only how the risk-on assets are signaling some worry here, worrying signs, but I want to go ahead and talk about what's going on in the underlying indicators. I'm talking, to be honest with you guys, about the boring stuff. I know that probably doesn't help me with the YouTube algorithm to let you guys know that in advance, but this is the kind of stuff that if you can listen to it, if you can follow these indicators, they will help you to get ahead of the broader market, because 98% of traders are not watching these indicators. So let's go ahead, let's step out of our bubble here within the crypto space and within the stock market, and let's go ahead and take a look at some indicators that can give us the insights that the institutions are following. First off, I want to go ahead and talk about what's happened since the recent FOMC meeting and the US 2-year yield. So this is the yield that you earn on 2-year treasury notes that mature in 2 years in the United States. This is one of the best, most predictable markets that can help us to determine what the Fed is really going to do next. And on top of that, we can also keep an eye on the DXY, or the dollar index. This is measuring the dollar's broad performance against other currencies. Well, while the equity markets are telling us one thing, which is that no one believes what Jerome Powell said back a week or so ago, that the Fed is going to be basically continuing to keep tight on the fight against inflation, that they're going to keep raising rates and keep confident. The market is saying that's BS when it comes to equities and how they've been reacting. The retail crowd has been pushing up equity prices higher, taking more risk, and betting that the Fed is going to take on the soft landing approach. And to be honest, with how Jerome Powell spoke, it's easy to understand why some people thought that way. But the bond markets are not buying it, because bond markets, they not only follow what the Fed is doing, they follow what's going on in commodity prices. And they try to predict, quite accurately at that matter, whether or not inflation is under control. Because the US 2-year yield is likely going to be tracking where the projection is for the federal funds rate. Somewhere slightly above, or a slight premium of where that federal funds rate should be heading towards, right? And we can see here that since the past 3 weeks, we've not only flipped from a red downward signal here that flipped back in January, back to a blue one, but we've got a really nice pop-up, the highest level since back here at the beginning of the close of the year, right? So again, we are back up to around 4.4%, fading back those gains, and it looks like we've got really strong momentum coming into that, not letting up on the broader trend that has signaled that the Fed is not in the driver's seat here, inflation is. And the Fed, so long as it does not remain in the driver's seat, meaning that it's getting ahead of inflation, raising interest rates at a heightened rate more than what the market expects in order to cool demand, we are going to continue seeing higher interest rates, plain and simple. You can see how if we look back on the weekly trend back in, say, 2018 or other previous rate hikes, the trend is very clear on the weekly time frame with our key indicator here, right? When we start to see a long-term red decline, that will be where we get optimistic on equities long-term. That's when we're going to feel that the Fed is having to pivot and capitulate to the broader equity markets as equity valuations are below fair value, the economy needs saving, and it needs that excess liquidity to save the financial system. So far, we are not seeing that. The Fed cannot ease up yet because there's still too much inflationary pressures in the economy. And while we haven't gotten a flip here on the weekly time frame for the DXY or dollar index, we are getting very close to potentially getting a blue flip. And this has held a ton of relevancy. One of our key indicators that we track for momentum has been incredibly accurate in producing some valuable insights on the major swing trade opportunities in Forex markets. While we don't trade in Forex too much, this is where, when you utilize certain indicators that have high consistency, we can start to get some really great signals to go long, ignore the noise, and wait until the trend reverses in the other direction. So again, keep an eye on this here, and again, whether or not we start to get that flip. If you guys want to get access to the indicator that we utilize here and some of our other different types of indicators we use, I highly recommend you guys check out the Dash report. But again, you guys can always just follow along here on the channel and stuff. We're going to continue to keep you guys informed as best as we can. But it's a great way to support the channel, and it allows us to have a more active participation with you guys and helping you in regards to your investing journey and trades and so much more. Now, the one big thing that I want to focus and bring your attention to here is oil prices. Now, again, turn off our drawings here, just focusing on the moving averages as well as our momentum indicator, still here on the weekly time frame. Take a look at this. Since back in June of 2022, when we got the double top in oil flushing down here, right to around $108, as we had chop here, we started to get a clear flip from blue to red, signaling that the trend was heading downward. And really ever since then, outside of a small weekly fake out here between October 24th to the 31st, this has been in the red. It has signaled to us that it hasn't been time to go long oil specifically just yet. Maybe you could long oil stocks, but not long the base commodity itself. And it signaled that inflation, or more specifically, the price of oil, was going down over time. However, if we dive into our moving averages here, we can see that here are the 200-week moving average, especially not the 200-week standard moving average, simple moving average, but the exponential moving average. The EMA for the daily time frame has been resistance. However, the weekly time frame, the 200-week, has started to serve as clear support. We talked about this back about a video or two ago, that keep an eye on oil, because this is going to be one of the key determination factors as to whether or not we are done in dealing with inflation. If oil cannot let up below this 200-week, which bear in mind is expanding over time, slowly but steadily, then I think there is a very good chance that we can pop back up not only above the 200-day moving average, but eventually move up towards $100 a barrel. Don't bet against it, guys. If the Fed is really going to start moving towards a softer position, if there is easing in financial conditions, like we're seeing in equity markets right now, giving people more money to spend in the economy, and therefore increasing the core physical money supply in day-to-day commerce, that is going to lead towards inflationary pressures. That increases demand against the existing supply. And therefore, as a monetary phenomena, inflation starts to play out. When we start a blue reversal here on the weekly, watch out and hold on to your horses, because oil is likely going back to 3 digits. It is not crazy to think that oil could come up to $100. We have seen in previous tops in the past, if we turn off the log scale here and start to look back in the past, that oil has many periods of time throughout history, right? Especially back here between 2011 2014, where it chopped many times. It went down to about $78 like we're at right now and came right back up to 110. So don't be so surprised if it remains elevated for a prolonged period of time. Now, it's not just oil that I'm interested in here. There's also natural gas as well. As we mentioned here, and actually I'll go ahead and show you guys here, we mentioned in the Dash report around 2.5, 2.7. This is where we were really getting interested in natural gas here, as we're keeping an eye on it. And as you all can see, while we haven't gotten a flip here on the daily or the weekly indicator, it is definitely looking like we could be getting a blue flip here in the near term, especially considering how oversold natural gas is here in the short term. Now, what's making us so confident that we'll get this flip? I understand some of you guys are saying that don't get caught up in a bias. Why are you so convinced that commodities are going to start signaling inflationary pressures, i.e. that they're going to start going up? Well, the reason for that is because of what we're seeing in the broader commodity sector. Lumber had its biggest surge, its biggest recovery so far off of the lows from around $372 here for the lumber cash contracts all the way up to currently around $472, and it went up to a relative high, its highest level since back in October at around 534 points. That's a significant move. And again, this plays into the increase in cost and the imbalance between supply and demand in our economy. Let's take a look at some other ones. Soybeans, another food-based commodity, since back in July, has not been letting up. It's continuing to move higher. It's above its 200-day moving average. And while it's definitely not expanding at a massive rapid pace, month by month, if we simply just take a look at from a month-by-month perspective, you can see that each month we're increasing by roughly around 3% each and every time. That adds inflationary pressures when you go to the grocery store. On top of that as well, we've also got other commodities like copper, which have continued to set in higher lows and higher highs since back in the collapse in July. So this isn't letting up here. Copper prices play a big role in things, right? So we have all these different types of food and industrial commodities that are signaling that there's no real soft landing here when it comes to the topic of inflation. These commodities are still accelerating higher, and people are still paying a premium for them, meaning that there's still excess money in the system and therefore inflationary pressures. And why should we think for a moment that natural gas and oil, especially after the pullback they've had, don't have a chance to do the exact same? Until we really get well below that 200-week on oil, there is not equilibrium here. And notice, if you guys haven't dove into it yet, another big thing we've been talking about in the Dash report for months is the U.S. Strategic Petroleum Reserve. The U.S. government has finally stopped depleting this huge reserve of petrochemicals that they have in order to alleviate the overall price of oil, right? To be able to provide more supply and therefore drag prices lower in order to tame inflation. They have now stopped, and since then, oil has, rather than been moving down, it has started to push sideways and is building a foundation on that 200-week EMA. This is not a good sign. But putting all that aside, I don't want to bore you guys too much with commodities, taking a look at the bond market and currency markets. What's going on in equities? Well, all this stuff is going on while the institutional indicators, while the bond market is signaling that it doesn't believe what the Fed is saying, or more specifically, that it does believe that the Fed is going to tighten versus what the equity markets are expecting. So the bond market is pricing that the Fed is going to increase interest rates, that they're going to engage quantitative tightening and continue the job in dealing with inflation. But what are equity markets telling us? The risk-on markets, the retail mania, the meme stocks, well, it's all telling us that they don't believe what Jay Powell's saying. That they think now, for the 14th time, that we are going to finally be in a new bull market. That this time it's different. They're completely ignoring the fact that every single time on the big tech names like Apple and Microsoft, when we get above the 200-day for a week or so in regards to price action, this is usually the perfect time to go short. Because this time, though, on their mindset, it's different. It's completely different this time around. It's time to go long. The job of dealing with inflation is done. Just like everyone thought was the case in August when Jerome Powell came in and put the hammer down during that FOMC meeting. And that was the perfect period of time, back in August 15th, to just go short. Now, we have not gotten that flip yet on the blue indicator switching to the red side. We have not gotten that trend reversal just yet. I'm not here to say you got to go short everything right now. But we got to start getting prepared. We got to have our capital on standby and the accounts we need it in order to make the trades we want to make. It's about being prepared ahead of time and seeing the initial signs of weakening momentum, the initial signs that a trend reversal is ready to play out. Now again, similar foundations as well here as well. You can see a big gap up here, a couple days of continuation, fade down. Big gap up here, a couple days of continuation, then we fade down. Exactly how it plays out each and every time. These deviations above the 200-day, when we break below there, likely signal that we are moving in, as we have each and every time, into new lows. And that means the next time around, we're likely going to have the real recessionary pullback. We're going to get below that 200-week moving average, very likely here, as the market comes to the realization that the Fed cannot back out. It needs to continue tightening in order to create in demand and balance and bring equilibrium to supply and demand. Take a look at Tesla here. Tesla's gone up from around $100 nearly towards right under $200, a doubling and the share's price. But it is steadfast towards approaching that 200-day moving average. And each and every time we come up into that 200-day, since back here in the summer of last year, we can see that this is a range of deviation and chop. Again, we do not want to go all in on puts or go short these equities right when it hits these indicators. We want to see how price plays tango with them, right? Can it get above that 200-day? And can it start building support on it and start building off of it? Or is it going to hit those indicators, push with inside them between that 200-day simple moving average and the exponential moving average, and is it going to start to move lower? We don't need to short at the exact top. But again, and this is also another important point, guys, right? If the blue line here continues and we clear through those indicators, we'll happily admit here as we see more signs that, oh wow, this is the beginning of the next bull market. And then after that, we ride in our positions for the next decade or 5 years, so long as things keep going good and we keep making higher lows and higher highs. It's not always about picking the absolute bottom. It's about making sure that you've got the right signs here, that the trend is ready to really reverse long term. And again, this is not how typical bear market bottoms look here, folks. You don't see the same plays that were leading over the last decade during the last secular bull market leading to the forefront again. It's a big misconception that mostly institutional traders understand, or people who have big long-term focus points on the broader market cycles that aren't focused on just trading over the last few years, who have had a couple bit of years or decades of experience in trading under their belt. People who have traded during the dot-com bubble, people who have traded through 2008, they understand after about 20 plus years of experience that you have to understand that it's usually not the prior market leaders who are going to lead this time around. So Tesla shouldn't be doing this, as it was one of the best performers back throughout 2021, 2020, as well as 2019 and 2018. Okay? So we need to keep that in mind here. Now we've also got Meta as well. The big gap up here, which has continued, again, to squeeze the shorts who were overly short the company, as there was a lot of insider selling that led to these big gaps down. Now again, as we mentioned in the previous video, right, this gap down here, what happened afterwards? A couple days of continuation and further confidence for the bears, trapping a lot of shorts, and that fueled the rally to where we are right now. And now we have the counter opposite. We have a lot of people now leveraged long into this big gap of thinking, oh my gosh, everyone is convinced now it's the new bull market. What do you think is going to happen here? Again, take a moment to analyze the chart. What I think is playing out here is we're going to continue to move up here towards that 200-week moving average. Maybe into that pocket a little bit higher. And then after that, we're going to fade right back down. We're going to fill the gap like we did right here over the past few months. Again, if you guys are convinced that this is a full-on bull market, perhaps Meta does have the steam to start turning the 200-week into support again, getting above that range all the way up at 245 after already climbing from 90 bucks to under 91. You're betting on it getting above that 200-week moving average and continuing to move up with the broader market over a longer-term trend. And I think we really need to ask ourselves here, has the game changed? Can the Fed start printing money like it did over the last decade that propped up a lot of these tech valuations and the risk-on mentality? Is easy money really back? And if it isn't, then we need to ask a bigger question. Are we really still even in a position where the Fed can just simply do nothing? Or is it going to have to continue increasing interest rates and tightening its balance sheet? So far, used car prices are up. The vast majority of commodities over the past month are up. Oil and natural gas are signaling initial signs that they could be on for the next big move. These are not the kind of things we want to utilize as a signal to go long or start buying names like Carvana, which have already made a 453% move. And while it may continue a little bit, I think has shown very clearly over the past year, really almost 2 years here, since September 2021, that the risk-off mentality is where it's at, where you make the vast majority of your money. And that a lot of these names that were darlings, like RKKK, or the ARK investment ETF, all these names that were the darlings during the COVID era of easy money, the blow off top of the previous market cycle are going to be the ones that go down big time. And some of them will not come back, as with every bubble. It is a cleansing that happens, where bad business models and overt speculators get washed out. Anyways, guys, let's go ahead and dive into the review for EtherDrops and see how we can get some valuable insights from on-chain metrics. Hey there everyone, my name is Nicholas Merton and I'm the founder of DataDash, one of the largest YouTube channels in the cryptocurrency space. And in today's video, I want to spend some time to talk to you guys one-on-one about one of my favorite tools that I utilize in order to spot emerging opportunities in the cryptocurrency space, known as EtherDrops. Now, I probably don't have to be the one to tell you that keeping an eye on on-chain metrics can be one of the best ways to find early stage alpha and opportunities in crypto markets. Knowing when a certain wallet or account is swapping from one asset to another or making a transaction from a wallet or exchange account can give us a huge amount of insight into what could be happening in the future to the price of a given asset. And therefore, we need to have a tool that can help us to keep on top of that. And that's exactly what EtherDrops is aimed at doing. EtherDrops allows you to track any wallet of your choosing across a variety of different layer 1 and layer 2 networks so you can see real transactions as they happen. Not to mention, you're able to track large scale swaps in order to see what whales are doing on chain, swapping from one token to another, and track a variety of metrics related to NFTs, gas, and much more. And what's even better than all this is that EtherDrops is free to use. You can utilize the vast majority of features for free and only have to enter into a paid plan if you want to access a few niche features or when you hit certain thresholds of utilizing the EtherDrops bot. And one of the best parts about EtherDrops is that it's incredibly simple to get set up on your Telegram application. In order to do this, all you have to do is go over to dropstab.com, click on the 9-dot icon on the top banner, click on the EtherDrops tracking bot, and click on the Get Started button on the home page. From there, you're going to be given a prompt that'll open up your Telegram desktop application, or if you're on mobile, it should take you straight to the chat. But once you click on the prompt, you'll simply be brought over to the tracking bot and may have to click the start button to activate the bot. It's as simple as that. So from there, you can start utilizing EtherDrops and taking advantage of the opportunities and features that the service offers. So let's go ahead and spend a little bit of time as to how we can start utilizing EtherDrops to gain some serious advantage within the market. So to kick things off, I want to start by sharing one of the most simple yet practical tools you can utilize within the EtherDrops platform, and that's the gas alert tool. For those of you out there who are making swaps on decentralized exchanges or transacting funds from one wallet to another, you all probably know that gas costs can eat up all the difference when you're trying to buy that discount opportunity on an asset or swap between one exchange account to another. So that's why it's very important to track when gas prices are low. So in order to do this, all we have to do is click on the Add button within the menu, click on Add Gas Alert, and type a value that's reasonable for the vast majority of people, somewhere between 20 to 30. I'm going to go ahead and meet in the middle and put in 25. And just like that, we have gas alerts set, so we know when gas prices are relatively cheap and when it can be more cost effective to buy our favorite altcoins on a dip or be able to transact between wallets. This is an incredibly practical yet simple tool that I think is a great starting place to start testing around with EtherDrops, but it's just the beginning of what the platform offers. If you want to start tracking specific coins on the Ethereum network or other layer 1 or layer 2 networks, you can simply click on the Add Coin icon within the menu and start by typing in the token symbol of that cryptocurrency. I'm going to go ahead and type in LINK, the symbol for Chainlink. This is a well-known and liquid cryptocurrency altcoin focused in the technology of oracles, and it's one that I like to follow when it comes to potential dip buying opportunities or signals that momentum is strong. So I'm going to go ahead, now that I've typed the symbol, and click the 1 number icon here in the bottom left to signal and specify that I want to focus in on Chainlink rather than the other coins that the network offered. And outside of that, I also want to choose the pricing information. Where am I going to be getting the pricing data from? And what's great is that EtherDrops allows it to tap into a whole range of different networks. But in this case, I'm going to go ahead and choose the Ethereum network as it's the most liquid and most trustworthy. So now that I've clicked on that, I now have my token here in the given token price. I can double confirm that just to make sure it's the token that I'm looking for and make sure that the price matches up. But if I'm confident on this, I can simply go through and add in the next bits of detail. Now we're going to be able to set in data that's going to allow us to know when there are certain percentage fluctuations within the given altcoin, maybe because it's an asset we own or an asset we're looking to buy on a dip, or we can also be able to track when there are certain amounts of dollar weight and volume for swaps or transactions from one wallet to another. This can give us a lot of valuable insight, as we'll talk about here in just a moment. So let's go ahead and say that I'm looking to buy Chainlink on a 20% discount. When Chainlink makes a really big capitulative move to the downside, that's when I'm looking to go in big. So I'm going to go ahead and put in a value of 20, meaning that anytime Chainlink goes 20% lower from its current price, I'm going to get notified for it. Outside of that as well, we can also add in a dollar value for swap alerts. So let's say, for example, I want to go ahead and get notified when someone has bought over $500,000 or has sold $500,000 of Chainlink. And just like that, we've already set up our alerts here and everything is all ready to go. But if you want to be more specific and you don't want to get crowded with notifications, we can go ahead and not only change those values that we set in earlier, but we can also set specific price alerts for certain ranges of price. So if Chainlink, for example, at the moment goes from its current price of $6.96 down to say $5, then in this case, I'm gonna get notified when Chainlink is below $5. It's as simple as that. Or when it goes above a certain price range above its current price, if I like to trade or buy investments on signals of momentum. So this is probably one of the core features, again, that you would utilize within EtherDrops as a platform, but there's even more outside of this. We can also go about setting up alerts for NFTs. I'm gonna go ahead and scroll up here on the menu so we can see our icons, and just to notify, you guys can always use the menu here at the bottom. I tend to just use the one on the feed here personally. Either way, we can go ahead and start adding additional pieces of information. We can add individual wallets, NFTs, as well as other types of information. But let's go ahead and add in an NFT here. We'll go down to the bottom of the feed here. Now EtherDrops is going to request us to add in the token name or contract address. I highly recommend, specifically when it comes to NFTs, that you find the contract address, which you can find on Etherscan for your favorite NFT collection. I'm going to go ahead and type in the contract address for the Bored Ape Yacht Club, which is one of the biggest NFT collections out there. And it's going to give us the floor price here, which is 73.1 ETH. Now, as we did with the coins earlier, it's going to ask us for a price change in Bored Ape Yacht Club NFTs in order to receive notifications. Let's say, for example, that I wanted to buy it on a strong discount. If I see that Bored Ape Yacht Club NFTs drop by 15% or go up by 15%, I want to get notified. And just like that, I've already got my setup notifications right here. And again, I have the opportunity to set specific price alerts, to choose how I want to price it in, whether it's in dollar terms or ETH, which can be very important if you're simply trading from a dollar balance rather than ETH. And on top of that as well, we can change our alert settings as well as notifications. And we can also at any time go through and delete these types of assets from our watch list. But overall, this is how we add in the core coins and NFTs. But let's go ahead and do the last step here, which is adding specific wallets. In order to do this, we're gonna go ahead and type in /menu. That's gonna bring a fresh menu to the bottom so we don't have to scroll up every single time we wanna commit an action. By clicking on the add icon and add wallet, we can start adding a wallet for us to track. Now, one really important thing that I think makes EtherDrops stand out to a large degree is that you're not siloed to listening in to a certain address on one specific network. As many of you know, there's many different types of layer 1 and layer 2 networks that certain accounts bridge assets between in order to pay lower gas fees or engage in certain types of opportunities that just aren't available on one network that are available on the other. So it's important for us to be able to have that ability to listen in to all different types of networks for these accounts, and EtherDrops allows us to do this. It allows us to select all types of different networks from Ethereum, Binance Smart Chain, Phantom, Arbitrum, Avalanche, as well as Polygon. And if you don't want to listen to a specific network in order to cut down notification clutter, you can do so. But I'm going to go ahead and leave all of these ticked on, and then we just simply have to go about pasting in the address we want to listen to. There's some example addresses here. Generally look out for addresses that follow the 0x format that's familiarized on the Ethereum network as well as L2s like Arbitrum. Simply just go ahead, paste in the address, and from there, you'll be able to start listening to this address real time. Now, we can go ahead and also put in a label as well. I'm gonna go ahead and use the one that's mentioned here. So we're gonna put in NFT Sniper. and then we'll be notified when certain activities happen for this wallet. Now, when we click on Edit NFT Sniper Wallet, we can set all types of different filters or certain things such as pulling the balance metrics, as well as renaming the wallet and signaling which networks we want to hear from. In the filters category, we can set certain transaction values. So maybe we only want to hear when they do a certain transaction swap or a transaction over a certain value. Maybe we only want to get notified when they engage in swaps. And on top of that as well, we can include or exclude contracts that they may interact with. So these are some of the core features within the EtherDrops bot, but it's really just the beginning, as there's a whole range of other deeper features you can access involving liquidity pools and much more that we'll dive into here right now. So in this segment of the review, I want to spend some time to talk about how we can use liquidity pool tracking in order to gain even more valuable insights on our favorite altcoins, as well as how we can utilize the NFT pattern tool to spot emerging trends in the NFT space before they go viral. And on top of all of that, how we can earn some really solid referral income from getting the word out about EtherDrops to our friends, family, as well as our fellow traders. So let's go ahead and dive back into the bot. Now, before we do those things, I wanted to demonstrate how it actually looks to start receiving notifications from EtherDrops. As you can see, over the past few hours, I've started to get some notifications from whale accounts like NFT Sniper and Smart Whale that I specified that I wanted to listen out to. And I can also find the details of what they engaged in. It seems like both of them have been minting some new NFTs, where I can find the respected OpenSea link embedded into the message, as well as a link to the transaction hash on Etherscan to confirm the transaction. Going back though to the menu, we're going to go ahead and add in a liquidity pool. We simply have to click the add button, add pool, and specify which network we want to tap into. I'm going to be utilizing the Ethereum network. Now, it's going to request that we put in an ETH address in order to specify which pool we want to listen out to. In order to find a liquidity pool for the altcoin of choice, it's very easy to do so if you utilize info.uniswap.org. Here, we'll be able to type in the token symbol for our altcoin. In this case, I'm going to use Chainlink as an example again. And by clicking on that altcoin and scrolling down, we can find the highest TVL or total value locked pool, which in this case is a linked ETH pool. After clicking on that, we need not look any further than the top URL in our web browser and copy the 0x address that follows at the tail end of the URL. Once we've got that copied, we just come back here to the EtherDrops tracking bot, paste in the link, and press enter. Now from here, we're going to get the option to specify a specific liquidity change or increase or decrease in the total amount of liquidity on the pool. Now, in this case, I'm just going to go ahead and leave it as it is, but there's a reason why we might want to specify a certain degree of percentage of increase or decrease that we'd want to be notified for. Some people would say that this is to spot whether or not liquidity is thinning out, so whether or not there will be enough liquidity to be able to make a sound and liquid trade for your position from one asset to another. But it also could be a sign of growing confidence or weakness depending on increases or decreases in liquidity. Simply put, if there's an increase in the liquidity pool, that means that there's a lot of large stakeholders that are holding not only the more stable asset like Ethereum or USDC, but also the altcoin of choice, which could signal confidence, and vice versa. If there is a decrease in liquidity, it could signal that a lot of whales who own those altcoins that are providing liquidity may be looking to sell it. This is just one of many perspectives people could take on this, but it's a way where you can start to use it in a valuable fashion. I'm going to go ahead though and just skip on this for now, and now we can go back here to the menu where we can start to focus in on how we can go about adding in NFT patterns. Now, NFT patterns here allow us to start spotting emerging trends within the NFT space, and there are a few key ones that can start to signal certain patterns that may be relevant for different types of NFT traders. So for example, if we come back here to the bot, we can see that there are some umbrella lists here that are already pre-built for us, like the Smart Whales one that tracks over 170 addresses that are the top successful whales with a profit or loss over $500,000. So people who are making a lot of money and have a lot of capital at stake for their trades within NFTs. Outside of that, we also have the whales. So this tracks the 1,300 addresses with different ranges of ROI on different types of assets, but some of the largest stakeholders and players in the space, and also the top 3 mentors. the 1,100 addresses that have minted the top successful free NFT collections like Goblin Town and Troll Town. Sometimes NFTs are free to mint, so because of that, this is also another valuable category where sometimes you can mint an NFT for free and be able to eventually sell it at a higher valuation. So these are some of the custom built ones that are already built within the application, but you can also create custom lists as well. For simplicity's sake, I'm going to go ahead and rather than adding a lot of custom addresses, which you're welcome to do within EtherDrops, I'm going to go ahead and click on the Smart Whales feature. Now from here, it's going to ask me how many matched actions I want to see. If you want to receive less notifications, then you basically want to set it where essentially you need to have a higher number here, like 4 or 5, before you start receiving notifications. So essentially, if I see 4 or 5 addresses that are out there who are buying similar NFTs or minting NFTs more specifically, then I'll get notified for it. So I'm going to go ahead and click forward here, and now that NFT pattern is added, and I'll start receiving notifications when the Smart Whales list starts engaging in certain NFT actions. So this is really valuable stuff, and it can help us to spot those emerging trends, to even just give us the go to start doing a bit more research into what these accounts are buying and why they may be valuable in the first place. Now, on top of all of this, if we pull back the menu here, I want to go ahead and showcase to you guys how you can start to make some serious money by referring people to EtherDrops. In order to begin earning revenue from the EtherDrops referral program, you have to make sure that any new users you're getting to sign up utilize either your unique referral code or utilize your unique tracking link. This way, EtherDrops will know that you were the source that brought them to paying for one of the paid plans. And on top of that as well, if you're curious to figure out about the details of the referral program, although they may be subject to change over time, currently EtherDrops is paying out 20% of any revenue generated on the first purchase. So if you refer someone to a monthly plan or an annual plan, no matter what plan it may be, you'll get 20% of the revenue from that first purchase. And on top of that, anyone who's using your link will get a 5% discount off of the listed price. So it's a win-win for both participants. And if you're curious to see about which different pricing options there are, you can find them on the website, as they may change over time. I highly recommend, if you're looking to refer people, to set them up on the annual plan, because again, you're going to get 20% of the revenue from that initial purchase. So for the annual package, you can start generating some serious revenue. But again, all in all, it's a great way to earn. And with the annual packages, you'll also, as a user, save money as well, if you tend to be utilizing EtherDrops on a very frequent basis. EtherDrops as an application is utilized by over 480,000 participants across the world and sends out millions of notifications to different users within the crypto space on a day-to-day basis. It's an incredibly powerful tool that I think you should consider utilizing in your arsenal, and as mentioned before, you can try it out for free and see whether or not it's useful for you. But no matter what type of trader you are, there's all types of creative ways to use EtherDrops. So feel free to check it out at the link down below in the description, or feel free to utilize my link down below if you're looking to get a discount on any of the paid plans. It's one of the great tools I use in my arsenal, and perhaps it may be useful for you as well. Thanks so much for giving me some time out of your day, everyone, and I'll see you all in the next video.